All right, 94 banks have collapsed so far this year, and that has devastated the FDIC's insurance fund. It has plunged to $10 billion from $45 billion, and now its chairman, Sheila Bair, is wondering how to replenish that fund. Bloomberg columnist Jonathan Weil is telling taxpayers to watch their wallets. He joins us to explain why, and it's a good question because, as far as I understood it, this fund is collected purely from the banks who are members.
And it's backed by the full faith and credit of the United States. So the options...
What isn't these days?
Right. So the options that the FDIC has, a handful they're contemplating. One, they could do what they normally would do in this type of a situation if it weren't for political pressure from the banks, which is charge the banks the appropriate insurance premiums. They could ask the banks to prepay their insurance premiums in advance, which is a form of borrowing, taking future revenues to take care of present costs. They could borrow directly from the banks, and that's been a little bit controversial because they're supposed to be regulating the banks at the same time, but that's perfectly authorized by statute. Or, and this is an option they're also weighing, borrow the money from the Treasury. They've got a $500 billion credit line from the Treasury. Now, I don't... what gets me about this is...
$500 billion credit line.
Yes.
Kind of bad.
Well,
that's almost TARP-sized money.
The way she phrased this on Friday at a speech was she posed this as a philosophical question about whether or not that money is there, that credit line is there to help the FDIC offset for losses that they already know about or for unforeseen circumstances. And I'm thinking, this is supposed to be for the philosophical question. This absolutely should be a last resort. And
so essentially, they could go to the taxpayer.
Well, go to the taxpayer. Now, the way the statute works is that money is supposed to be repaid to the Treasury if it ever happened, with assessments on the banks. But I guarantee you, if that credit line ever got tapped, you would immediately have people in Congress saying, "Now, wait a second. If we made the banks pay this money back, they could make just the financial crisis worse. So we could be punishing the banks even further." And this would be a subject of debate about whether to change the law, just like we did with TARP last fall.
Hey, didn't we hear, though, from the FDIC, in your story you write about an article that was written, about a year ago, and we heard from the FDIC, and they said what?
Well, the article was by David Evans, Bloomberg News reporter, and he raised, pretty gently, I thought, the suggestion that, hey, the FDIC doesn't have enough capital on hand to cover all the losses that are foreseeable, and it looks, one of the options might be have to go to, the Treasury for a taxpayer bailout. The FDIC completely flipped out when he printed this article. It sent open letter to Bloomberg News, said we had done a disservice to our readers, etc. But you know what? David's article was dead on. Their capital has continued to plummet, and the reserves that they've been setting up to, cover to set aside for future losses have just been too insufficient.
Hang on a second. This is the beauty about you being a columnist and not a reporter for Bloomberg. You can express your own opinion. Clearly, you don't think it's a good idea for the FDIC to go to Treasury for the money. What do you think the best option would be?
Best option would be, just like when you require drivers to have insurance when they go on the road. You're not allowed to go drive your car without auto insurance. Well, you shouldn't be allowed to drive to be a depository institution without deposit insurance. And if you can't afford the bill, then
find a new business.
Find a new line of business. I mean, these banks have to bear the cost of this. If it's really industry-backed, make it industry-backed.
We get any indication of what they're going to ultimately do anytime soon, you think?
Not yet, but they have a meeting next week, and they've been floating. It seems like every day there's been a new story in the press about which option they're going to take. I'm not going to try to hazard a guess at this point.
Pay next year, maybe early this year. It seems like Sheila Bair thinks that would be a good option.
Oh, yeah, that's an option that's definitely on the table, and it may be the most politically palatable to the banks, which is apparently the political interest group they care most about.
All right, Jonathan Weil, expressing his own opinion, as he is allowed to do as a Bloomberg columnist. Those are not the opinions of Bloomberg LP.